Hello and welcome to the Cryptocurrency News channel. This is the TAFA and chart analysis for March 10th, 2022. And yes, we are down, just like in my episode I said yesterday that yesterday's rise was probably a bull trap. It was actually a bull trap. Not too hard to see because it was obviously people's overreaction to both the Biden news and oil prices dinking about 10% the night before yesterday. Oil prices actually did dip a little bit more today, but not significantly, so the momentum wasn't maintained. And of course, about the Biden executive order, people were like, yay, he didn't ban crypto. And then after a while, we were like, you know what does that actually change for right now? And the answer was, of course, nothing. So people kind of got over the euphoria, and once they got over the euphoria, they kind of sold back some of the profits. I do see Bitcoin basically wobbling between around 37,000 and about 44,000 for the foreseeable future over the next few months. I don't see a verifiable downtrend, though. Because if you actually look at the chart if you actually look at the longer term chart, if you look at the 3 months, you can see that we haven't really been in a downtrend since late January. And it's actually been about essentially a month and a half, a little bit more than a month and a half actually, since we've actually evened out. Now, you can't really say that any of this from here to now is actually a downtrend. We have been consolidating and the oscillations have been getting smaller and smaller, but the overall median line has been about the same the entire time. So I do think we're coiling up a little bit, but I don't actually think we're going to go in either direction. There was this dip here, obviously, but as you can see, even the initial invasion shock did not go to the levels of this dip in January, which had nothing to do with a war. So I do think we've actually seen kind of like the lows of the war unless Putin actually goes nuclear. Now, if you look at the 5-day graph, you could say, oh, look, this is a head and shoulders formation. But if you look at the monthly graph, you can say like, well, this was a head and shoulders formation and that didn't really go anywhere. So I doubt that this will actually go anywhere. I do actually think the median line is about $39,000 right now, and we will wobble around that within 3,000 or 4,000 either way. Now, there might be some news every once in a while that shocks it to about 45 or brings it down to about 36, but other than that, I don't really see anything. But because we're pretty determined to actually trade in this oscillation range, I think it is a good time for swing traders right now. Because if you just buy near the bottom, if you buy near 40,000 and then sell slightly above 40,000, I think you can get 3 or 4 cycles of that and make some money. It is always risky because you can always have like some kind of war end and the thing goes way up. But I highly doubt it. You could also wait for about 37,000 to buy in because I think we will actually revisit that price sometime, especially because the CPI numbers actually came out yesterday, and the CPI numbers do not look good. 7.9% inflation year over year. That's including food and gas. Without food and gas, it's 6.3%. But that is still almost a 40-year high on inflation. And that's probably not going to change. Like Janet Yellen says, that's probably not going to change until this conflict is over. And I see it being a couple of months before the conflict is actually over. Although I don't think the crypto market will dip that much more, I don't really see it rising that much more for a couple of months. Hopefully I'm wrong, but I think we will be here until about mid-year. At least until mid-year, and then I will reevaluate to see how the diplomatic situation is actually going on in Ukraine. So right now, that's where actually we're at right now. And that's going to be the factoring on my technical analysis as well, looking at the numbers. The oscillators basically all are neutral. We have commodity channel index at negative 23, stochastic at 41, RSI at 48, nothing out of the ordinary, all neutral. The momentum in the MACD level is really just going to be like how it moved yesterday, so those don't really count for me right now. All the moving averages are a strong sell, and the 50 moving average is way below the 200 moving average. That is the one signal that I would actually look at. If the 50 ever surpasses the 200, that could be our bull signal. But at this point, looking at the chunks, I think we're probably still at least like 2 or 3 months away from that, at least right now. So I don't really see any kind of true bullish signal right now for a big raise. And plus, like I said, war brings uncertainty, and uncertainty is not very good for any market, crypto or otherwise. So if you're in the swing trading mood, I would buy maybe around 36, 37,000, maybe like 37,000, and then sell maybe around 41, 42, because I do think we're going to be in that range for some time. On the weekly, all the oscillators are still neutral. The commodity channel index is slightly getting towards negative, but not oversold, but not really. And also on the oscillators, like if you're doing swing trading, I would actually wait until the stochastic hits under 20 and the commodity channel index is close to negative 100 to buy. On the weekly, we're still pretty much neutral, nothing there. All the moving averages are neutral all the way down to the 30. Now, if we get to 50,000, all these are actually going to change, and that would be the big bull signal. 45,000 would be the first one, 50,000 would be the second one, confirming the bullish market. But right now, there's really nothing. It's just oscillating between two values, and I think that's why it's a good time for swing traders. Monthly, still the same thing. The only one I really look at is the EMA and the SMA for the 10. Those are still pretty strong sell. And the thing is, we haven't really been able to stay above the average for more than 2 or 3 days at a time. And we haven't really gone above the average for quite a while. So right now, I'd still say it's kind of a seller's market on the monthly average. I am kind of like a little bit bearish going into the weekend. Maybe I think we'll dump to maybe like 37,000 over the weekend, but probably not that much lower. The oscillators are all neutral, so I don't really expect anything to happen there. So if you're looking at the next, like into March and April, I am slightly bearish for March and April, but not really that much bearish. I do think like there is some value to be gained from swing trading if you're going to do that. I don't really swing trade. I'm just going to yield and stake. But I also think this is a very, very good accumulation period because I do think like, later on this year, there could be a chance for a real burst up. I do think like, the worst of the Bitcoin dump is over, but I don't really see it moving up for quite some time. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.